Good morning. Welcome to the XM.com weekly market update. And joining us again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Let's get into these numbers again. Not too much happening on the domestic front, but the composite PMI numbers have come out, and there's a few of these coming out in other countries this week.
Yes.
Basically, above 50 is a good number.
Expansion.
Below 50 is not so good.
No.
As we can see from the chart there, which is not too surprising, but it's been fairly consistently below that 50 mark.
That has been, yes, and over the last couple of months, especially since, May, probably April-wise. Let's see how it runs over the next couple of months, and if we do get a bit better as far as uptick, the jury's out, and we've just got to wait and see. But the Australian economy, the dollar's choppy, the overall theme, there's hurt on Main Street. I noticed one of the top auctioneers in Sydney said on the weekend that they sold a place going back about 20 months ago for a certain figure, and they took it to auction again, and it only was up to $3,000 on a $1.4 million property. So by the time you add your stamp duty and everything in, there's probably been minimal growth across that sector in the last 12 to 18 months.
Yeah, and I think on that chart as well, it has got up, obviously, the last reading, but we'll keep an eye on that over the coming weeks as well.
Yeah.
We'll head up to Japan. The CPI came out slightly higher.
Yes.
But I think Japan, that's probably a good thing.
Yes, it is. Governor Ueda. We're not expecting any surprises. That was of yesterday, though I did note there was something that came out in the last 6 or 8 hours. Though they are importing a lot of expensive items, and that in turn is causing concern, but it's just the way of the Japanese economy. The yen has been very choppy. I know we'll get to that shortly, and certainly been sold off tremendously. But the Japanese economy, you'd have to be happy at those sort of numbers, considering also their stock market.
Yeah, and speaking of that, the Nikkei.
Wow.
We've talked plenty about the US market in the last couple of months, but this has also been a bit of a standout as well.
It has been a standout. It's been enormous, and it's had a rally strong, really came into evidence around that start of April, end of March, and then boom, it was showtime. And you look at that chart and you just go, wow. And that really has been extraordinary over that, the summer period into Japan now. It's given up a bit from those peaks of nearly 34,000, but I think it's still maybe its best days were ahead of it. Let's just wait and see.
Well, you would sort of think so as well, considering there's that mood in the market, like globally, is there going to be a recession somewhere? And in certain economies, that talk is slowly dissipating.
Yes, it is. You've got to be evident. That's very evident because of the jet-fueled rally that we've seen across equities this year. We both had a differing opinion come Christmas last year, and it's still a long way to Christmas. It's 5 months today. So let's just see where we run it for the rest of the year. But you can't argue with the numbers.
No. And then, as you mentioned, the yen.
The chart tells a story, and it truly is quite incredible. You had those lows going back to 128, and now at nearly at 145. You saw probably intervention there from the Japanese, the BOJ. We've got a decision coming out from them later this week on Friday. But you got 3 central banks meeting this week: Fed tomorrow, ECB Thursday, and President Lagarde's team, and then Bank of Japan on Friday. 141 for the yen. It was down at 137 last week, and then it bounced. And all I'll say is this: if you think you've missed out on trading currencies, park that idea for 15 minutes, go and have a cup of coffee and come back, because the markets are electric.
Wow. US, interesting chart here that I found. The US wage growth is now slightly higher than the CPI number, which is interesting in that.
Well, it is.
Is that pain of CPI, well, you would think nowhere near as harsh as what it was 3 to 6 months ago.
Exactly right. We were worried about that as far as wage growth going back over the last matter of months, or certainly over the last year, and with CPI as high as it was. But it's CPI is just continues to fall, and you've got to ask yourself, Fed Chair Powell coming out tomorrow, and it's pretty much baked in. I mean, everyone you talk to, is it worthy of ratcheting up 25 basis points?
Yeah, I agree. I can't see why they need to do it any longer. You've got a strong labour market. You've got CPI now at 3% and likely to fall further. But in reality, I just don't, whether or not they do it or not, I just don't think it's going to make any difference.
Well, you would have to think that you wouldn't get another one this year after that. If it does go up, they're saying they might get one between September and November, but I think that's off the cards now. Seems to change. The outlier has got to be energy prices, and they've had a big rally up in the last couple of, maybe a week, but we'll get to that in a second.
Yeah, for sure. Another interesting chart here is the used car prices. So we knew, like throughout the pandemic, the used car prices just went through the roof.
Sure
it was
did.
just ridiculous. But we've seen the last few months there in the US, these numbers have come off significantly, which once again is probably one component of where the CPI now is.
Yeah, exactly. I mean, there was one point in time that used cars, I think, were more expensive than new cars. That the chart tells a story, and for anyone not following that, take a snapshot of it, study it, and that really tells you the condition as far as used car prices in the States.
Yeah, for sure. Once again, we talk a lot about inflation, so this chart gives a real snapshot of a lot of economies there. There's only 5 which is still trending higher. The majority are heading lower, which we know about. And unfortunately, at the bottom there, one of those ones going higher is still Argentina.
Isn't that shocking at 114%? How do those poor souls live? It must be frightening. But that's Poland 11.5%, Turkey 38%. A lot of them stuck in that 6% range, and Australia in that 5.6% sort of range as well. US the 3%. Saudis 2.8, I noticed that, and Russia 2.6 or 2.5. So whilst it's up a little bit, in China, I don't know. Those numbers seem to be very interesting.
Yeah, I agree. Some of those, are they accurate numbers or not? But once again, it would have been interesting to have that chart 12 months ago, because those numbers would have been significantly higher across the board. But
absolutely,
the central banks have certainly done their job by the looks of things.
Yes, there's no doubting that.
Finally, we looked at the oil prices last week, and they have jumped quite a bit this week.
Yeah, they sure have. You've got that NYMEX crude nearly at $79 a barrel and 82.5, 82.60 for Brent. So that's going to cause, I think, if that continues, and look, it's so hard to forecast. Have a look at the chart. People say, well, what's happening to crude over the next 6 months? I'm frequently asked that. Well, my rebuttal sometimes is, don't worry about 6 months, and I'm not even worried about 6 weeks. I'm more interested in the next 6 days. Because, are we going to see that top out again, high 80s, and all of a sudden it retraces? There is a lot of factors at play, but one of the factors that you need to consider is Saudis and Russia as far as production cuts and the impact that's going to have moving forward. And I keep on saying it, and maybe falling on deaf ears, but the strategic petroleum reserves, those what Biden needs to fill. And if that is the case, and he's got to fill them at $85 or $90 a barrel, then that's going to cause much concern. So let's just see how that all plays out over probably the next 2 quarters, this quarter and then certainly the next quarter leading into Christmas.
Yeah, I think that's correct as well, that short-term view. Because if you look at that chart over 12 months, you basically saying it's in a downtrend.
That you do.
Because the drop off is not reaching the previous highs.
That's right.
Now, obviously, it's picked up in the last week or so, but that could be on the back of these cuts that we've seen in Saudi, Russia, etc.
Yeah, I'm going to talk. I'm going to, and I'll miss you for a bit of time. I'm away in October, and I'm going to Fujairah outside of Dubai for the Gulf Intelligence International Energy Conference. They have one there yearly, and it'll be fascinating because I've got ADIPEC the week before, Abu Dhabi Oil, and it's a global event, and just to see the theme of how that's all joined together, and then rolling into Fujairah, where oil's going to be in 3 months or 2.5 months' time. It's going to be fascinating.
Yeah, well, it's certainly an active market, which it always is. So, but it'd be good to keep an eye on. But let's see how these numbers play out over the next few weeks. The central bank numbers, that'll give us a good view of what's going to happen in the next sort of month or two.
You bet.
Excellent. All right, thanks for joining us.
Good to see you, Andrew.
And that's the XM.com weekly market update.